warm welcome. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Nikunj Dalmia. And for now, the market picture is looking a bit jittery. In fact, it seems like the market is jittery ahead of the monthly options expiry, which is tomorrow. A lot of data points to deal with respect to the minutes, which we are expecting later from the Fed, as well as the debt ceiling overhang continues to impact the global markets. So whether you look at the European markets or the US futures for now, everything is stumbling in the red. So we are not alone. And that's quite visible on metals as well. That's the top drag at the index level. So the likes of corporate sector have seen quite a bit of slide on an overnight basis and continues to be under pressure. Back home, it's the banking space which is showing quite a bit of weakness. So HDFC Twins are actually the biggest drag on the index at this point of time. And even Reliance and ICICI Bank, these are the heavyweights that are putting pressure on the Nifty. The broader markets are actually faring better. In fact, Nifty 150 hit an all-time high level on an intraday basis, and the advance decline ratio continues to be favoring the advance. And in fact, in terms of key gainers, you have Laurus Labs, Metro Brands, SpiceJet. Some of these counters are gaining momentum, while you also have Hindalco in Focus that just came out with its earnings. It was an operational miss, so that's the reason that stock was a bit in the red. And then Nykaa and LIC will come out with its earnings, so we are watching out for those as well. A lot of cues really to watch, Nikunj, and the market is in a bit of a consolidation phase. It's not going anywhere, to be honest. 18,400, a bit of a hurdle.
You know, that's perfectly all right. You're going up, you're coming down, but you're not cracking.
You're not tracking.
You are simply just, running from the one end of the range to the other end of the range. Frankly, for me, there is more positive than negative. Purely looking at what the global setup was and purely looking at what the market breadth is. We've had very little global support. We've had very little coming in terms of a global tailwind, at least for benchmark indices, and I think markets have done reasonably well. Look, 18,400, which is the resistance, is not far away, and we've not gone racing down to support. We've not tested it at all. I mean, we'll get Kunal and Nuresh to talk about it, but my sense is that you meandered in a 150 to 200 point kind of a nifty range. 3-4 days, 5 days, you've moved in that, which is okay. The breadth of the market, not near perfect, but there are good positives there. I like the price action in, let's say, Zomato. It's chugging along very smartly. You got a good comeback, let's say, which is there in some of the construction stocks, some of the OMC stocks, some of the banks are stable. Tata Com, I think Kunal was discussing this in the morning, right from the word go, the stock is adding a lot of weight. The electronic manufacturing space, I think, has become really the pot of gold for the market suddenly. If it was defense 2 years ago, if it was railway 6 months ago, now it is anything which has got to do with electronic manufacturing, whether it is Keynes, Dixon, Amber or Sharma SGX. That entire space now, I think, is riveting with a lot of positive energy. There you go, Dixon, good commentary, 7% higher. Keynes, solid numbers, 15% higher from numbers. Sharma SGX, not such a great day, but it has moved quite swiftly from 280 to 360, and this is like the real 1333. And then you got Amber, which also I'm sure is giving Dixon some company.
Oh, well, yes. So a lot of these manufacturing names doing quite well in the trading session. And yes, even though we are consolidating, at least not a big crack happening. But where's the momentum lying now going forward? Let's try and decode that with Kunal Bothra as well as Naresh Mirani as always. And Dilip Bhatt also joins us to talk to us about the fundamentals of the market. Kunal, tomorrow is expiry. We were expecting some big moves, but for now, very, very tepid.
Yeah, it's a tepid market, so a better adjective would be that it's more of a dull kind of a market when you look at the index movement. But then the other end of the market is that there's a lot of vibrancy or momentum which has come back into the mid cap end of the market or tier to large cap names where there is a strong follow through price action. Some of the names which even Nikunj was highlighting, Keynes, etc. These stocks have done remarkably well. You look at the mid cap end of the market, trade, the likes of NCC, for example, has managed to spring back into momentum after hitting that sub 100 mark on an intraday basis, and a lot of other individual stocks which are riding on some sort of a decent momentum over the last couple of days. Those stocks are seeing a good follow through. So I think the markets are actually broken into two different or distinct parts. One is the large cap names, the benchmark indices, etc., where there is a lot of dull kind of a movement. But the other end of the market is where there is a lot of momentum which is still coming by. That generally indicates that we are into a consolidation when we look at the index. But then there is a lot of activity in terms of stock specific.
Naresh, what is the word in your dictionary which describes today's or this week's price action?
So the way to say it is never short a dull market. So till the time we are in the trend, there is no sense to short small dips. So for now, it is basically be stock specific. What is interesting is Nifty may have not moved up, but if you look at the mid cap index today, it is just 0.5% away from an all-time high. So that's the kind of momentum which is shaping up in a mid-cap side of it. Small caps have not done as much in the last couple of sessions, but overall the broader market continues to remain same. The large heavyweights have done nothing, so Reliance is still down from the 15% from the highs, from the all-time highs. HDFC Bank continues to struggle over the last 2 years. So overall, the trend is still positive, and stock-specific action continues to be positive. Globally, we've seen a correction over the last few sessions, but we've not seen a similar one in India. That's an indication of outperformance. So continue to ride on to the move.
Afternoon, how you been, sir? Long time. Hi Dilip, long time. How you been? How's life treating you now that you don't have to go to office early in the morning, deal with clients, give them ideas? Life is easy, right?
Life is never easy. Life is always challenging and it's always changing. So I think the change is always welcome. And I think as the change comes, the newer challenges come. But because it's always such a pleasure to interact with you, to see your such a smiling face, which is always so contagious, and it is always contagious even in the markets. That's what I can see.
You're smiling at least every time you come on ET now, so we should keep the tradition going. Now, what will make our viewers smile is going to be a simple answer to this simple question. What is Dilip Bhatt's next multi-bagger idea? If you want to make everybody smile, since we are talking about smiles, please answer this one.
Sure, I think you have asked definitely the most difficult question without any doubt. And surely, I think I think before we just talk about it, I think what we are seeing generally is that when the market gets a solid FII backing, and that is when the confidence in the broader market improves. And we are seeing that happening, and sector by sector in the mid caps also we are seeing. But as the way the thing stands, one has to be actually a little more stock specific is what as what we always say, and that strategy always pays even in the long run. But surely not that we have a multi-bagger ideas from the current levels. But I think certainly some of the stocks that really look pretty good and pretty solid. I think one name that stands out, maybe I will just say in the front line, I think Divi's laboratory looks extremely good. The way Europe has capitulated in terms of the production and the way the opportunities are flowing to Indian, we all talk about China plus. I think, but before China plus one has happened, I think the Europe has thrown up good opportunities the India way, and that is where I think Divi's is going great guns. Maybe this is one stock which I really feel that has got, even from the current levels, maybe it has gone up quite a bit from the base levels, but even from the current levels, it can still be a kind of a multi-bagger over the next 3 to 4 years. But this is a stock one should watch out for in the front line. It's a front line, good liquidity. And I think next couple of quarters, next couple of years, we'll see, the number of new molecules that has come Divi's way and the kind of capacities that they have. I think it can surprise everyone on the positive side. We are quite upbeat on Divi's from the current level. And it's a stock which one should go for on a longer term basis. That is as far as the large cap goes. So I think that's a stock which certainly appears to be good. I think from mid caps, I think some of the stocks that we like have really run up quite a bit. But within this space, Radiant cash management looks pretty interesting, Nikunj. It's in a CMS business. They have just reported the results. I think what really stands out is the opportunity is huge. Though the perception about the cash as a business is nothing really great, that the way the UPI is happening, they feel that the cash business may not be all that good. But really in cash management, we clock 18 to 20% growth for next couple of years. And the valuations are very cheap. I think current 24, they may clock about 10 rupees earnings. So it's available at 10 times, 25% ROE. And generating good amount of free cash, and dividend payout is almost 45 to 50% of the PAT. So I think it makes for a good combination. That's a stock one should watch out for. It has not gone anywhere since the listing, but that looks pretty good and interesting.
What was that stock name, Dilip? We all missed it. The mid-cap bet.
Sorry, your voice just broke
No,
off. Can
Dilip,
you
I was
just repeat?
asking, we missed the stock name that you were talking about, the mid-cap bet. Could you repeat?
Yes, Radiant Cash
Radiant
Management.
cash management. And I think with this 2000 rupee conversion, etc., also happening, that might also be at least giving a bit of a fillip to that counter. Uh, but just wanted to highlight some of the other stocks which are in focus today. The entire chemicals and specialty chemicals is doing quite well. Deepak Nitrite is of course reacting to that big capex plan that they have announced, so that's 10% higher. You also have Sudarshan Chemicals, which has been reacting to good set of numbers, and then another small cap name is Himadri Specialty, which is perking up as much as 9 to 10% in the last few minutes itself. In fact, talking about the stocks and news, Dixon, as we were pointing out, we spoke with the management earlier. They are expecting the mobile revenue to double in FY24, and it's likely to contribute as much as 50% to the total revenue. And the EBITDA margin guidance for FY24 stands at 4.25 to 4.5%. So a bit of a comeback quarter for Dixon Tech. Mahindra CIE is in focus today because Mahindra Group has actually sold 3.2% stake in the company. So a bit of a technical reaction there, 5.5% higher. And then Deepak Nitrite, as I pointed out, 5,000 crore capex announced. In fact, on that note, let's go across to my colleague Lisa. She's standing by to help us understand what's the big impact that we're expecting on account of this capex and why that stock is surging by 9%. Lisa.
So Deepak Nitrite has been surging in trade, and that is because its arm Deepak Chemtech, they have signed a 5,000 crore MOU with the government of Gujarat. Well, they will be setting up this 5,000 crore over the next 4 years, and it will be used to cater to projects related to chemicals such as specialty chemicals, phenol, acetone, and also bisphenol and polycarbonate at Dahej as well as Nandesari. Well, these projects are used to cater to various user segments, and also it will help reduce the import bill of India. If we look at specialty chemicals, they cater to the demand of agro as well as the pharma industry. Phenol and acetone will be used for laminates, plywood, pharma, as well as paint and adhesives. Bisphenol caters to epoxy as well as adhesives, and polycarbonate that will be used to cater to segments such as electronics, defense, medical equipment, as well as consumer goods. Well, these proposed investments will also help reduce India's import bill. And the development also indicates that Deepak Nitrite is moving towards organic initiatives, and this is mainly used from the cash which they have generated from its phenolics business. And even analysts, they have been quite enthusiastic about this development of Deepak Nitrite, because as Motilal Oswal said just recently, that if the company ventures into specialty and complex products, then it will entail better valuations for the company. So, well, yes, as we can see, Deepak Nitrite is surging in today's trade on the back of these developments.
Okay. Right, Lisa, thanks a lot for that. There's one stock which continues to disappoint everybody. I think that's Gland Pharma. 4,000 has become 900. Dilip, while Divi's is in the CRAMS business, what is your understanding of other generic companies? You know, for example, companies like Gland and Aurobindo. Injectable was the high margin, high focus business, but that has turned out to be the liability rather than a boom.
Sure. I think if one were to just go back a little, Land Pharma actually used to do contract manufacturing for other companies. The time they decided to come in front and try to sell it directly, and the moment they have come under the purview of FDA, I think things have really slipped very badly, and they have never really recovered from that. And I think all the results continue to disappoint that. So I think there is, I mean, the way I look at it is, unless and until there is some kind of strategy change or something that happens, I think Land Pharma still, maybe it looks very, it appears very attractive, but there is no fundamentals which can really suggest that things are really turning, and that is very important. And as far as Aurobindo is concerned, I think most important is that post-pandemic, the kind of medicines and the kind of things that has been that people have that they have been administering, especially by the doctors recommending that. So I think Aurobindo in that sense is in a very sweet spot. Post-pandemic, most of the items which they have been producing caters to that particular requirement. And in a way, that is getting reflected also in their performance, in their volumes. And I think we will see the gradual turnaround of Aurobindo also happening. And of course, whatever was the political impact of that, that probably is now receding into the background. So I think it's a very mixed bag. And as what I said, still it is Divi and maybe Heikel which will benefit post what has happened in Europe, in particular, because there the manufacturing has completely collapsed. And that is why the Indian farmers have got an opportunity. And I think in the forefront is Divi and Heikel, which can really capture that opportunity.
Okay, but take a look at the market. We are now below the mark of 18,300, so a bit of a crack happening at the Nifty level, perhaps at the lowest point of the trading session, and pull up the Bank Nifty as well. Let's see whether the pressure is actually coming in from the banking names, because it was HDFC Limited, HDFC Bank, as well as ICICI Bank, Reliance. These were your top drags at the index level, and that continues to put a lot of pressure on the market. And to add to that list, even Kotak Mahindra Bank is down over 1% in the trading session. So all of these names is something which is dragging the index lower, now below the mark of 18,300 at the index level. But at least there's something to cheer about. That's the commentary coming in from the RBI governor, who's saying that the GDP growth in India could be even better than 7% in FY23. Of course, not giving us an indication whether the pause in the rate hikes is going to be sustainable or not, saying that inflation has moderated, but there is no room for complacency, and that pausing interest rate hikes is not in his hands, but it is going to be data dependent. Listen into that bite, and then we'll slip into a very short break.
In fact, all the fast move high frequency indicators, about 70 of them which we monitor in the Reserve Bank of India, almost in all of these high frequency indicators, the momentum was maintained in Q4. So therefore, I will not be surprised, we should not be surprised if the growth is slightly more than 7%. For 23-24, we have given a figure of 6.5% capex, and the infra spending by the government has also picked up with again large provisions in the budget for capital expenditure by the government. There is evidence of revival of private investment also. We notice it in certain sectors, particularly steel and cement. Your members of CII will know better. Capacity utilization in the manufacturing sector, according to RBI's latest survey, which we have published, is around 75%. But I am told that the CII's survey shows that capacity utilization in manufacturing sector is even higher. There is this forecast of a El Nino, and we have to see whether it actually happens, or how, if it happens, how intense it is.
With Bhatt and our technical experts, but the stock which I want to revisit, and I can say it's eating our impact, is Metro Shoes. Why Metro Shoes? Well, the numbers weren't great, the stock came down, but then we spoke to the management, and the management came out and said that do not read too much into our quarterly performance, because there were some inventory changes. Yes, our margins came down, but we are confident that in coming quarters, 30% plus is where the margins would be on a sustainable basis. Let's hear out the management.
Very comfortable guiding to 30% plus. Every now and then you're going to see a quarter blip up or blip down. This quarter blip down because, as you rightly pointed out, this is a slightly lower gross margin quarter due to end of season sales and clearing. Though we're very proud of our gross margin number for the quarter, it still is one of those quarters where that dips down. We also are investing in marketing, we're investing in travel, we're investing in some step-up costs that come with expansion, that come with managing a business. So some of that EBITDA that you're seeing happening is actually an eventful thing that happens on a Q basis. But for the year, we feel very confident guiding that our EBITDA, as it has historically been, is going to guide over 30%.
Dilip, which is one niche consumption stock you're bullish on? I mean, there are folks who like watch companies, there are folks who like liquor companies, there are folks who like shoe companies. Vedant Fashion has done well, Campus Shoes has done well. What do you think would be a good, decent 15-20% compounder from here if somebody has to bet on the consumption space?
In the footwear space, I still think that Relaxo certainly has a lot of ingredients in them, a lot of things going for them. Of course, they made a mistake when they increased the prices of their best-selling footwear, and probably that took the toll. But otherwise, I think they are putting their act together, and sooner than later, we will see that the numbers coming back in a very robust way. So I think, and if you see, even their ROEs they've been clocking very well, and these companies typically have a very good cash flows, operating cash flows. So I think amongst, if I were to pick and choose from the lot, I would say that Relaxo still appears to be very good, and of course followed by Bata in that particular segment. But otherwise, I think the liquor space continues to be something that one should always have in their portfolio, in spite and despite all the kind of tax hurdles that they keep on getting, and potentially they will always get it. But we will see that despite all that, their volume numbers will still give them a very solid support. And generally, in this kind of industry, possibly it may take a couple of years for tax regime to stabilize. But I think United States still holds that potential of compounding at least 15 to 20% if you were to take 3 to 4 years. But that's a stock which certainly you should have it in the portfolio, is what my strong opinion is. And that can give a very decent ROIs to your portfolio too.
United Spirits is one stock that you should have in your portfolio. Could be a good 15-20% compounder if you have a 3 to 5 year view. But let's look at the big movers today. NBCC is one stock apart from NCC, which is buzzing in the trading session. It's seen a breakout from the downward sloping resistance. It's been advancing for third straight month and has snapped the fourth session streak of forming lower highs. You also have Narayana Healthcare, which has hit an all-time high level today, trading above all the key day moving averages, and the volume 2 at 5 times the 20-day average. And then you have Laurus Labs, which is seeing a breakout from a 7-session consolidation, surpassed the 100-day moving average and volumes over 2 times the 10-day average. Naresh, your take from some of these big movers, anything that you would want to recommend as a buy?
So out of these names, NBCC comes up on the radar for the fact that the stock has done well. In terms of relative terms, it is getting closer to a 1-year high. So that is one stock which I would be watching out for. The rest of the names still look to be a 1-day move.
Okay, rest of them are a 1-day move. That's the word coming in, but quite a bit of move on the Nifty at this point of time. Kunal, what are you making of the slide that we are seeing, and the pressure on HDFC Twins, Reliance, ICICI Bank? The heavyweights are dragging their feet.
See, that's what I was telling you, that large cap end of the market is behaving completely different as compared to the mid cap end of the market. And the pressure is definitely being seen on the large cap front. I think today even ICICI Bank has started to get into a mild correction. Axis Bank was going through a correction. So add to that HDFC Bank, Reliance Industries, L&T, I think if I'm not wrong, that stock has also corrected from 2,200, 2,220 where it was at the day's high in the initial half an hour or so. So I think from this point of view, we can expect that the markets can get into a drag mode. But the other point is that we are not even breaking out, neither breaking down of the index ranges. So what we could probably be seeing is more of adjusting of positions for the current series. We'll need to see how the premium or discount for the next month futures for the individual stocks, that also pans out, because just pure selling on the current series as well as buying on the next series could probably be an adjustment which could be happening on the expiry week. But till the time it doesn't result into any kind of a major breakdown for these stocks individually, I think we can just expect that these stocks would consolidate. So till the time Nifty doesn't break below 18,050 mark, I would expect that we may probably continue to see this kind of a pattern.
Naresh, you have been quite positive on ICICI Bank. Would your view change today?
Not really. The stock has just seen a minor downtick today, not even much of a downtick. So technically, the stock is clearly a leader in the whole large cap banking space. It's say a 1% to 1.5% away from an all-time high. So clearly the leadership is there. I would expect it to break out above the 960 mark, and say at 935 to 945 is a buy zone. Would keep a stop loss at 930 and expect a move towards 1,000, 1,050 in the short term.
I think the 4-digit mark to come on ICICI Bank soon, but let's listen into the management of Dixon Tech as well. We spoke exclusively with the management. They're quite optimistic about the mobile segment, plus margin is something that they believe is sustainable.
If you look at the Q4 is around 5% odd, but if you look at for the full year, it's around 4.3% odd, which is clearly there is an expansion of almost 70 basis points year on year. I think so we would stick to that margin guidance of 4.25 to 4.5%. clearly we are seeing the benefits of operating leverage kicking in most of the verticals, and some of the verticals it will kick in this financial year as well as next financial year. And also focus on backward integration and migration more and more to our own design solutions. I think so it's also helping us on that margin expansion. As of now, we closed at a mobile revenues of somewhere around 4,300 odd crores with our existing customers. So we are having a growth potential on our existing customers as well. And also this new customers potentially for the 6 months of operation this financial year should add around another 4 to 5,000 crores. So we are looking to double this revenues in this financial year, mobile revenues.
Dilip, we've got two consensus trades in front of us. One IT, which is the consensus avoid. Second is banks, which is a consensus buy. Now money is made when you go against the consensus. Which consensus is worth going against? Moving out of banks or buying back IT?
Nikunj, I've been maintaining for some time that despite the uncertainties and the troubles that we see for the IT sector over the next couple of quarters, I think IT is a sector, well, clearly, I think it's a great opportunity to buy and build your portfolio because the risk return is heavily loaded in favor of IT from the current levels. The risks probably are already, most of it is the price. And possibly there may be some bit of headwinds for them in the next couple of quarters. But considering the fact that all these companies are very well managed and the conversion from EBITDA into free cash is so very high, and some of these companies always have been doing, I mean, the payouts are so good. So I think this really presents an opportunity to buy some of the stocks, and especially the frontline stocks. And Nikunj, what I mean by buying is one should do a deferred or SIP kind of buying in IT, which is what I've been maintaining. And I think one can gradually add, as far as IT is concerned, I would say something like Infosys, TCS in the front line, maybe Tech Mahindra in the mid-cap segment, and maybe Tata Elxsi also looks pretty interesting from the current levels. So I would say that IT is it's a time to buy IT. As far as the financial sector is concerned, I think the NIMs that they have posted possibly is close to an all-time high. So I would say that it's not time to get out of banking sector. One should hold on to them because the going will continue to be good. But whether you can make a significantly great money from here, I have my own doubts. But yes, as a part of giving the resilience to your overall portfolio and even getting a reasonable return, I think one should still hold on to the banking sector.
The banking trade and IT looks like a good buy given the risk reward is favorable in the view of Dilip Bhatt. But on that note, we let you go, Dilip. Thank you so much for joining us today. Okay, before we take that short break, let's go across to Naresh as well and figure out what his closing trade strategy is. Naresh?
So looking at IndusInd Bank, that's a stock which is again coming into making a new 52-week high, very close to that mark. And that's a 3-year breakout in the making. Pre-COVID also it used to be at 1250, 1300. So expecting this breakout to happen over the next few sessions and go towards 1400.
IndusInd Bank is another name that Naresh likes as a buy strategy at this point of time. Slipping into a very short break, but as we do that, financials continue to be big favorite in the market with respect to market makers like Sunil Singhania as well as Prashant Jain. Listen in to what they are betting on, whether it's the large banks or mid-tier banks.
Financial services and banks will play a major role. I think when in Indian markets, banks and financial services are almost 35-40% of the economy as well as the markets. And so it is very natural for most investors to have a decent allocation to banks. Structurally, for the next 3-4 years, if the economy, as I said, is to grow from 3 trillion to 6-7 trillion, I think financial services will play a major role and will continue to be quite constructive on the bank. The only thing is bank on names where there is good brand name, because from a banking perspective, deposits as well as cost of deposits is the raw material. And the better you are there, the more competitive you become.
Banks are in a sweet spot. Balance sheets are very clean. Credit growth is reasonable and profitability is holding up well. So I would say these banks should continue to do well. My vote would be for the, again, the large, big brands that have scale, that have good technology platforms, that have a good CASA mix. And so my vote would be for, I mean, that's an obvious one. And there could also be other smaller niche companies which can do extremely well, like some small banks are doing quite well. In fact, I used to discuss with many people that State Bank will do more than 50,000 crores profits, and they used to joke, but then they texted me back, look, you were right. So I think the bank has done extremely well, and other than one product category maybe or two, they have actually not lost a share in any of the products. So I think it's a really well managed bank.
Anand Tandon also joins us. Let's take a conversation forward. But before I do that, I could go back to Nifty. 60 points lower, about 150 points lower from the day's high. Dinesh, how much merit would you give to the fact that last 6-7 days we've gone up, come down, we've gone up, come down. Pretty much we've been jumping in the same space.
So not really much, because we are at the same place also after that up move and down ticks. We are basically around that 18,250, 300 mark. We see a 100 point uptick and a 100 point downtick. So till now, nothing has been damaged. And what we are seeing is most of the effects are coming from the heavyweights. So we've seen Reliance take a downtick, HDFC Bank, HDFC Limited take a downtick. So we are not seeing any change in terms of stock trends in any of the major components of the Nifty as such. So we are still stuck in the band. Wait and watch for any new leadership to come in to see that band break of 18,000, 18,400.
Okay, wait and watch for that breakout, but let's wait and watch for what the chatter is when it comes to dealing room. My colleague Sharad is joining us with the latest buzz in the newsroom.
Well, yes, in focus we are having Orient Cement, and what we are gathering from dealers is that the mutual fund houses have been selling the stock over the last few days. Now, do remember, mutual funds are having almost a 7.2% stake in the company, which translates into roughly 1.5 crore shares. And the key domestic investors include ICICI Pru Mutual Fund, ABSL Mutual Fund, and also Nippon Life AMC. Now, we did a channel check as well, and we are getting the news from the channels is that the higher demand is coming in from the western market as compared to the southern markets, and the Devapur, which is the Telangana unit plants, expansion plans might be delayed, and also the rollback of prices might be there as the price hike was taken last month. Apart from this, also the brokering houses have stated that there is a high leverage happening across the company as the capex kicks in over the next 2 to 3 years itself, and they have earmarked around 1,050 odd crore rupees for capex plans for FY24. Now, what the impact would be, and of course the ROC numbers are expected to come down by 30 to 40% over the next 2 years, and the range is expected to come in between 6 to 8%, and for the first quarter of FY24 also is expected to be impacted because of planned shutdown for the maintenance.
Thanks, Sharad, for that. But Anand, what's your take on the cement pack, whether it was Free Cement or even India Cement today? The operational performance hasn't been up to the mark. Do you think it's just a month, a quarter delay, and we'll see that in the coming quarter, or it's going to be sluggish? What's your take? Anand, you have to unmute yourself.
I don't think the operational performance of cement is going to be good anytime soon, though there is always the management commentary which seems to suggest that either margins will increase or costs are going down. The reality is that most of the areas in India are surplus cement, and what we are seeing is a consolidation in the industry, which is still continuing to happen, but I think will take more time, because while the consolidation is going on, each of the large cement players are also expanding capacity, and the capacity is way ahead of where the demand growth is. So despite the kind of pipeline we've seen in infrastructure, I think demand continues to be fairly robust. Now, there are some segments where capacity utilization is more than 70, and management indicates that they will go up to 80% and so on, where there is at least some reason for expanding the capacity. But at 70, 72%, most of the companies are not going to give you economic returns. So I would stay away largely from the sector.
That's a take coming in as far as the cement space is concerned. Meanwhile, the commentary for Cummins flashing for you on the screen. Nikunj, I don't know what to make of this line, cautiously optimistic. Most of the managements use that. What does cautiously optimistic mean? Isn't it an oxymoron?
Cautiously optimistic means that they are not ready to commit.
Yeah.
And yet not ready to admit. So commit is high growth, admit is that there are problems. So when you do not want to commit or you do not want to admit, you use the word cautiously
But
optimistic.
look at it like everybody else is committing to the fact that the entire capex cycle is picking up, lot of buzz around the industrial space, but the management itself is not willing to commit to that growth rate.
And that's largely because, see, you have to understand that for Cummins there is a large part which comes from exports. And there is a large process of energy transition which currently seems to be happening. I mean, the mainstay actually, if you ask me, is diesel engines. Within diesel engines, you don't know, we used to use a phrase, we use a phrase 24/7 power. But 10 years ago, when you said 24/7 power, it actually meant 24 hours of power in 7 days, right? Now, it is genuine 24/7 power which has come in. So as a result, the usage of diesel has come down. Diesel engine has come down. Industrial inefficiency because of private sector distribution in a lot of space has come down. Also this entire ESG angle that do you really want to use diesel as the preferred fuel. So a business like Cummins, which is export dependent, Europe is going through a problem patch. The diesel dependence I think is coming down. These are a range of factors which I think could affect that stock. And if you look at a lot of other stocks, Kirloskar group of companies, special situation, they've done exceedingly well. You look at Elcon Engineering, it has done exceedingly well. So there are different type of stocks which are doing well in this entire capex cycle. Anand, your views on Cummins?
I think you've summed it up quite well. I think, going back to the question that was asked, what does cautiously optimistic mean? It's like the language that analysts use when they say hold or, it actually means a sell because you don't want to spoil your relations with the company. So the same thing goes with management. When they say cautiously optimistic, it means basically they're not going anywhere. So I don't think, as you also mentioned, the fact that the diesel engine is the mainstay is going to be a problem going forward. I mean, already there is a steep move away from using any kind of fossil fuel, and that will only accelerate from here on. And the improvement in the power supply certainly will also adversely affect them in India. I don't think that there is a great way to play the capex cycle right now. If you are looking for capex cycle plays, it's better off dealing with companies which are in the more traditional business of capex. Somebody like a Thermax or some of the other names that you mentioned may be better positioned to benefit from there.
Some stocks which are holding on, Anisha, I mean, Indian hotels. And Naresh Mirani, we've not discussed Indian hotels in a week time. Are you missing it?
Not really. Now is the time to actually start looking at booking profits around 400 levels, or say in parts from 375 to 450. And the other
line
hotels
today, is it, Naresh? There is something seriously wrong with my line today or what? I mean, did I hear you say book profits in Indian hotels? Ye kaise?
Yes, so at some point of time...
Did you actually say that book profits? Indian hotels?
Yes.
No. Say it again.
There are alternative choices coming up in the market, so there are new trends shaping up.
And which are those trends?
So a lot of stocks in the banking space look interesting, and NBFCs. So there is IndusInd Bank, which looks interesting, L&T Finance Holding. And say a lot of small caps have started looking interesting. So
departure coming in for Indian hotels, but is there a similar view, Kunal, on Indian ITC rather, because that stock too has been doing quite well for itself. It's 30% up this year. I didn't realize that. After that massive rally that we saw last year again, it's been trending higher.
I think it's just 30 paisa or 20 paisa away from a new high. Again, 433, 433. So no, I think no, looking back for ITC, the recovery the stock has shown over the last 1 year, I think has been just nothing short of fabulous. From 215 levels where the rally actually started off for ITC to now 400 plus, where the consensus view for ITC is moved from being an under-owned to now being an slightly over-owned or overweighted stock. It still continues to look very attractive. So till the time the stock trades above 400 levels, the bias would remain bullish.
In 2020, maximum MEMS were made on ITC. Stock made a comeback. 2021, maximum MEMS were made on SBI.
ICICI and SBI.
And SBI, they've made a comeback.
LIC?
I think those memes will last. Those memes will last given the positioning of the business. Because, see, with ITC, my conviction was always that it was an ESG, and that is a perception issue. See, Aisha, market price is a function of EPS and PE. P is something which is hard to predict. P can go up in a short time, P can come down in a short time. And ITC suffered because cigarette business had contracted, which it recovered. Hotel business came as a positive surprise. The paper did well, and FMCG business started gaining market share, and margins improved. So everything fell into the slot, so to speak, for ITC. But for LIC, it's a different kettle of fish. I mean, they're losing market share. The government will continue to sell if the price goes higher. In terms of technology, digitalization, they still have a long way to go in terms of where things would move. And I have no idea, even if composite insurance policy comes through, which it will one day, I have no idea what will happen to LIC. I want to look at United Spirits and ITC last 3 years, and let's map them on one sheet. Is it a coincidence? Let's see. United Spirits and ITC in one sheet in last 3 years. And if you extend it also, you actually will be surprised. And it's just one of those rare factors at play. We call them as sin stocks. Can we have the graph, please? Let it come. Then we'll talk about it. A point I just want to, there you go. I think I'll wait for it. Maybe this time. Anand, why is that liquor stocks and tobacco stocks, they have a divergent trend? It's always happened in the past.
Well, I haven't tracked them separately, together to see what happens. But see, ITC, as you mentioned, it is a company which was, there were two areas that they were investing in a big way. One was FMCG and hotels. And frankly, I think both of those are now reached sizes where they should be generating serious profits. I mean, if you're not making money in hotels today, when will you ever make money? And FMCG also, with over 10,000 crores of sales, you should be making serious amounts of profit coming forward from there. So the real trigger now in ITC will be to see if they actually live up to their promise of separating out these businesses and floating them separately. I don't believe that there is any major funding requirement, and even if it is, ITC has more than enough cash flow to pass on to any of those companies and set them off, and that would certainly unlock a lot of value from here on. United Spirits, the biggest problem is the way that the distribution works, right? I mean, clearly because each of the states have their own policies, and by and large, some of the largest consumer states have a policy whereby they pick and choose what they want to sell, and you are a monopoly buyer effectively. There is a lot of give and take that happens between the company and the government, and that automatically constrains the kind of distribution margins that you can make. If the margin were to become, if the market was to really open up, I think spirits will also do exceedingly well. But right now they're doing okay in terms of trying to see if they can move up the curve in terms of the product base and get out of some of the lower margin products and so on. But it's clearly not the same kind of market space that an ITC is.
Naresh, at what point in time ITC becomes an overbought stock? Do you think this is one of the stock where you should ride the momentum till it peaks out, or it's now time to say there are better alternatives? By the way, Indian Hotels, you've already given me a different answer today.
So ITC have been saying the same at 420, 430. That alternative choices, the risk reward is not great. But the fact is we continue to see momentum to be strong. I was expecting some bit of a dip to come from that 420, 430 mark. But barely we saw a single day dip to for one day towards 410, 415 and has recovered sharply. So overall, for now, the trend continues to be positive. One can ride on to it. What we've seen is the shareholding continues to improve. We are seeing FIIs participating from a time where FIIs were selling for a period of 3 to 5 years. So for now, it is better to keep a trading stop loss. I would keep a recent low of 410 as a trading stop loss and ride on to this.
That's a take on ITC, but let's take the BSE trades as well. Kunal, what's on your buy today, sell tomorrow radar?
So two buy calls. First one is a buy on REC Limited. It's more of a contra bet. The stock is, I think, 0.5% odd down today. It looks attractive because the way the stock has managed to hold up this support of 127 to 128 looks to be very attractive as a base formation. So buy on REC Limited, targets of 138, stop loss 126. And M&M is the other auto stock which is making a comeback. It's been quite some time that the stock has stayed, in a lower end of a price band as compared to most of the other auto peers. So I think at 1250 odd levels looks very attractive from a short-term play. Targets of 1320, stop loss at 1240.
What about you, Naresh?
So that would be a buy on IndusInd Bank closing on a highest point of the day as well as setting up for a breakout move. Stop loss at 1250 and a target price of 1320. Second is a buy on HCL Tech, which is again trying to shape up in terms of a relative chart. compared to the rest of the large cap IT names. A stop loss at 1100 and a target price of 1140.
What has reversed today is actually Bikaji, and what has reversed is actually Metro. Now the difference is that Bikaji reversed from the day's high and it is at the day's low, and Metro has reversed from the day's low and it is almost at the day's high. Anand, which is that one sweet spot of yours in terms of buying a consumption space? I mean, I've got folks who say we like Ethios, it's a watch company. There are folks who say we like Landmark, it's into luxury. We've had folks who've said we like Bikaji because it is simple. Indians will consume more farsan, more bhujia as they evolve. What do you think would be a nice, good consumption idea for next 3 years?
Well, I mean, you have to keep watching because most of the FMCG companies don't trade cheap, right? So it's also a question of what kind of portfolio you're looking at. For the moment, I would think that you are betting mostly on rural. I would imagine the next 1 year at least, you will see a lot of money going into the rural economy and that should boost consumption. So most staples, etc. will do reasonably well. On a consumption side, if you were to look at consumer durables, for example, I would think that it's perhaps time to look at the not so favored two-wheelers, etc. Bajaj has done very well. Hero still has to move. It is still trading at giving you a dividend yield of upwards of 4.5–5%. The bringing in new motorcycles and so on. That is also another area that I think, from a discretionary point of view, could be something that could do quite well.
Okay, that's the take coming in on some of these auto names as well. Just 4 minutes left for the trading session to end. So let's track what was happening in the market today. It was the heavyweights that were putting pressure. We managed to claw back to that 18,300 level almost, but considerably off the highest point of the trading session. A lot of weakness when it comes to the banking names and private banking names at that. ICICI Bank, Kotak Mahindra Bank. You also had names like HDFC Bank which were coming under pressure. And then result reactions coming in thick and fast. Cummins India is one of those, 7% cut. You also have good numbers coming in and good commentary coming in from Metro brands, so that stock was higher. Even the likes of Dixon Tech, etc. are ending at the highest point of the trading session. But Kunal, IT, one question that we were asking earlier, is there a contra play there? If yes, you had to bet on that, which would be the stock that looks like a conviction buy?
So it's HCL Tech as of now. From the large cap IT names, mid cap IT stocks have moved up higher. So I'll probably give it maybe a few days of pause for these stocks to make a bit of a correction. But I think from the large cap names, HCL Tech is showing all those classic ingredients of a breakout, confirmation of a breakout, as well as starting point of change in open interest trends. So what we look out for initially is whether the trends in the OI has shifted from being a short writing or more skewed towards writing of short positions towards building of long positions. We've started to see that happening for HCL Tech. Hopefully the rollovers so we'll get the confirmation by tomorrow post closing. If that also comes out to be extremely positive, then we can expect HCL Tech to stand out to be one of the better performers from the large cap IT names. And the other way to look out for is that HCL Tech has also managed to surpass the previous swing highs. I think 1080 or 1075 was the previous swing high for HCL Tech. It's managed to surpass about those levels comfortably, much prior to the peers like TCS, Infi, etc. So I think that's also another additional edge for HCL Tech on the relative strength basis.
And with respect to the expiry tomorrow, what should we watch out for, Kunal? If you had to take a bet, where will we settle? What will be that number?
So I think start of this week I was mentioned that 18,200 plus or minus 1% is the range. So it's a very good week for option writers. So anyone who's writing call and puts in terms of options for the index, I think it's a brilliant strategy for them to try and write the index options. My sense is that we should probably be closing very close to this pivot of 18,200. So I wouldn't be surprised that we may correct by, say, another 60-80 points tomorrow and hopefully correct at that or close at that 18,200 mark.
So 2 minutes left, just write it. Tomorrow morning 100 points approximately should come in.
Yeah, so depending on the combo premium, the premium should not be, I think, more than 50-60 points.
You're talking about June? We're talking about June or
May series, current
June
series.
Don't start right now.
No.
What is the Nifty May premium? I'm just to check because...
I think I'd seen yesterday it was around 78 points, 80
Which is
points.
different, right? I mean, normally in a
down... It's quite heavy, right?
It is not actually, Anisha. It used to be 100 points
100, 110 points on average.
I thought just ahead of the expiry, it would narrow down further.
No. It's a long series. So and also remember, June is a long series. So it's not 20 days or 25 days. It's more than 35 days. So 29 June is the expiry for the next series, and we are almost on 24, 25th.
Okay, nonetheless, for the month of May, at least we are tracking solid gains. For now, it seems like there's a 3% gain for the month so far. But for the day, it looks like we're ending in the red, below the mark of 18,300 for the Nifty. Yes, the broader markets were outperforming today yet again. Look at the advance decline ratio, 1,350 stocks advancing to 600 in the red. Sensex 2 going home with a cut of around 0.3%. And sectorally speaking, the culprits really today were the banking space, right? So whether it's HDFC Bank, ICICI Bank, Federal Bank, PNB, they were all in the red today, and metals too dragged their feet. So Ratnamani Metals, JSW Steel, Hindalco after its earnings, all of these counters were in the red. What stood out was Pharma. Good move could be seen in Laurus Labs, so a bit of a bounce back there. Sun Pharma reacting to Taro's numbers, so 2% gain there. And Alchem, Dr Reddy, Granules, these were some of the other counters that were active in the trading session. Whole host of result reactions really to deal with. You had Dixon Tech that was gaining ground, Deepak Nitrite 10% higher after that capex announcement. You also had names like Metro Brands as well as NCC, NBCC. All of these counters were in focus, and Mahindra CIE on account of that block deal also went home with a gain of around 5 to 6%. On the losing side, Adani Enterprises let go of 6%. So after that, 10-15% gain yesterday, a bit of a profit booking. Cummins India, after the weak commentary, was down about 6% in the trading session. And the Maharaja Batteries, a weak set of numbers coming in operationally, so 3% cut. Shree Cement, India Cement, these were some of your other top losers. So overall, a decent day of trading session for the broader markets, but the Nifty, Bank Nifty, that was what the pressure point was, and that's how we're ending the day, just around that red line for the frontline index. But with that, completely out of time on this edition of the show. Thank you so much for being with us.